Before we get started, I want to ask you all for a favor. Babe, can you bring little Mila? It is if you know anything about me, I love my family. I love my wife and my baby. That's what I do everything for. And it's my little baby girl, Mila. It's her 6-month birthday. So I'm getting her an Oreo ice cream cake for us to celebrate, even though she can't have any. Can you guys please give her a happy 6-month birthday, little Mila? Say hi to the camera. She likes sitting back here because she likes looking at all my crazy things. Actually, she likes the other way around. She likes seeing all that stuff back there. All right, with all that being said, thank you guys. I appreciate you guys. I appreciate all of the nice words. Thank you. Bye, Mimi. I'll see you in an hour. Thanks, guys. All right, let's get us started. We all got our baby fixed. Now it's time to work. You're here to, become financially free. You're not here to see a cute baby. Although that is a super baby investor right there. I'll give you that. That's perfect. All right, y'all. Let's get it going. So this is part 2 of the Super Investor Masterclass series. This is part 2 where we're focused on super deal analysis. If you know anything about my journey, which I'll dive into a little bit of an intro again, analyzing deals is my bread and butter. That's what I specialize in. And I think it is one of the biggest superpowers, because whether you're a buyer, a lender, like whatever you're doing in real estate, having the ability to truly understand what is a good investment and what is not a good investment, what is worth pursuing versus what isn't worth pursuing, all that, that comes from deal analysis. And if you make a bad investment, if you underwrote it and you did all of your analysis and it still ends up going wrong because of something out of your control, that's understandable. Like, investments have risk. But if you don't even do your own due diligence and underwrite your deals and make sure that if you are lending towards something or investing in something and then it doesn't work out, I mean, I don't know how else to say it. You kind of have no one else to blame but yourself. But that's okay, because you take that as a learning lesson. Even if you take a loss and then you get better and then you become better the next time, don't give up, don't quit. But that all starts with mastering deal analysis, or as we call it, super deal analysis. So let's get right into it. This is part 2. We went through financial freedom through real estate last time. That recording, if you're registered, that's there. It's also on my YouTube and the Wealth Through Real Estate and Super Investor community. So it's out there. It's everywhere. Definitely my YouTube. So actually, can I ask you for a favor? Please, if there's some value throughout all this, even just any one slide that really resonates with you, can you please screenshot it and then tag me, ideally Instagram, and just share with other people so they can come and learn. My number one goal is to help other people become financially free. And you helping me spread the message is going to be it's going to have a huge impact for that goal. So please, my Instagram is Michael M. Nat, Michael M. N as in November, A-T, Michael M. Nat on Instagram. Ideally follow me, because then when you do that, I can tag you and share it and comment and all that stuff. If you don't follow me, no worries. And then my YouTube is Super Investor REI. So Super Investor REI, which is real estate investing. So if you want to catch the last one or more, deal analysis trainings and more of these master classes, it's all there. And if you are registered, obviously you're here for the most part. So you're registered. You're going to get a copy of this recording as well. So this is part 2, super deal analysis. Let's get right into it. The next one I'm debating, I might switch it up. I might combine consistently generating great investments and raising capital for buy and holds, or treat them as 2 separate ones, or combine them. And then the fourth one being kind of a summary, like a culmination of my entire blueprint, like financial freedom, deal analysis, consistently generating deals, raising capital, and then kind of piecing it all together as the whole blueprint. So my path to financial freedom. So I'm going to quickly go over this. I talked about it last time, but I really want to highlight something and how one of my biggest obstacles, one of my biggest limitations ended up being my biggest superpower. And I really want to highlight that, because on your investing journey, there's going to be a lot of mindset things, limiting beliefs, just a lot of new things that you're going to be facing as you start becoming an investor. Either you have no real estate and start buying real estate, or you have 1 or 2 and you're scaling, or even you have 10, or people I've talked to even today have 20, but now they're leveraging creative financing or they're capital raising. There's all these mindset concerns and issues and limiting beliefs and fear of success, fear of failure. I'm not really the mindset guy by any means. However, I've gone through a lot of that stuff, and just understand it's part of the journey. Even if someone, you think, hey, I want to be like Michael, I want his portfolio, I want that kind of stuff. Understand the amount of mental overcoming, I don't know, things I had to overcome mentally to get to this point and understand that it's natural when you face something similar. And obviously, it was a ton of hard work as well. So I didn't actually buy my first investment until May of 2020. That's when I closed on my very first investment. So up until that point, I had 0 rental properties. But I started learning about real estate investing in 2018 when I joined the Army. So I had some time on my hands, and during that time, I spent listening to Bigger Pockets podcast, reading books, connecting with other investors. And then in 2019, when I was stationed in Fairbanks, Alaska, my wife and I, we chose not to live on base, and we decided to rent a property. It was a duplex where we were living in one unit upstairs, and the other tenant was living downstairs. So then I thought to myself, well, if I'm doing this and I'm living in one, I'm reading all these things, why can I not buy a property like this, rent out the other unit, and then live in mine either for free or at a discount, and then I'll own a real estate investment, something known as house hacking. So I started learning. I kept learning, right? Kept reading books, kept listening to podcasts. There was forums, all that kind of stuff. I started looking at properties on Zillow, started connecting with agents, and then I started analyzing properties. I used the Bigger Pockets calculator. I wasn't then, and I'm still not a huge fan of their calculator. I think it's overly cumbersome. I don't fully like online web tools either, which is ironic because if you have my calculator, you know how detailed and extensive it is, but I just wasn't a big fan of theirs. So I started creating my own as well. So then, I was analyzing properties left and right. In 2019, I spent literally all of 2019 analyzing every single small multifamily 2, 3, 4 unit that hit the market in Fairbanks, Alaska. I was analyzing it. Every single one that hit the market, I was analyzing. And then near the end of 2019, I learned about like RIAs or real estate investment associations, went to my first real estate investment association. I almost didn't, but it was like, because it was like December or November in Fairbanks, Alaska. So it was minus 20, minus 30, minus 40 degrees. But I said, you know what? I'm analyzing deals. I know I want to buy deals. These are real estate investors who are buying deals or are looking to buy deals. I need to go connect with people there. The great part about that is when I compared, like one of the things I want to do is compare my analysis on deals that I looked at and which ones other people bought, because someone was buying these. I figured it was them. And then I noticed I was connecting with other investors who bought deals that I previously analyzed. So I knew they were good investments, even on paper, but I did not necessarily have the courage, or like, I just didn't know what was stopping me from actually buying investments. I ended up, analyzing deals, made an awesome creative finance, or not creative at that time, but an awesome investing calculator so I can make analyzing a lot easier. And then I ended up analyzing around 200 properties from early 2019 until March of 2020. March of 2020. In March of 2020, I realized, dang, I am really freaking good at analyzing deals. I'm better than actually most of the local investors here. However, they actually have properties, and all I could show for it was numbers on a spreadsheet of deals that other people decided to buy when I didn't. I didn't know what was holding me back, but I just couldn't do it that first time. It was just so hard for me because my family's never invested in this. I had no friends that's ever invested in real estate. I did finally meet people that were buying and holding real estate, but it was just so hard for me to believe that I could be a real estate investor. So like I said, after analyzing over 200 deals, all I could show for it was numbers on a spreadsheet. So even though I spent a lot of time feeling like an investor, right? I spent a lot of time and energy feeling like an investor, analyzing deals. I actually still didn't own any single real estate. So in my opinion, I had 2 options. Either I had to stop playing investor, right? Either I had to quit, stop spending time on this thing and just continue exploring amazing Alaska with my friends and just keep having fun. Just stop wasting my time analyzing deals for then nothing to show for it besides numbers on the spreadsheet. Or I had to actually start buying real estate investments. So I didn't know any other way. So I gave myself an ultimatum. I said that the next deal that penciled out on my spreadsheet, I had to buy it. Even if I didn't make an offer, if I chose not to make an offer and it made sense on my spreadsheet, then I would stop investing altogether. It was hard to say that I was a real estate investor, but I was spending a lot of time acting like one, right? A lot of time and energy that could have been spent on plenty of other things. And I convinced myself, well, no worries, Michael. You're investing in the stock market. That could still make you financially free in like 30, 40, 50 years. Like just keep investing a bunch of money in the stock market and eventually I'll be free. Like it's fine. I could always go that route if I chose not to actually like do real estate. And in that same month that I made that ultimatum, COVID happened. The entire freaking world froze, especially our country froze. And I found a duplex at that same time that penciled on my spreadsheet. So, I gave myself that ultimatum. And the numbers were so solid on this. I was using my VA loan to house hack this property, so it was no money down. Obviously, not everyone has the VA loan as an option. You could use an FHA loan, 3.5% down, 5% down, conventional loan. There's other options, but for me as a active duty service member, I had access to the VA loan. And this property was sick. Like on paper, I'd essentially be able to live for free. And once I moved out, I would be generating over $1,000 a month of cash flow. Well, I had that ultimatum. Either I was going to make an offer and buy this property if my offer was accepted, or I was going to stop trying to invest in real estate. Well, thankfully, I made an offer. I went back and forth with the seller. We negotiated. It came to an agreement, closed on that property in May of 2020. So at the end of May of 2020, I had 2 rental units. My wife and I and my best friend, Bryson, we spent a ton of time renovating we spent 3 days, a whole long weekend renovating the unit, getting it ready for a tenant, and had it rented out like 3 or 4 days later. So they could, I officially got my first rental check June 1st of 2020, 9 days before my birthday. So that was pretty sick. And that's where my real estate investing journey really began. Over the next 16 months, I also did a lot. For me, I just needed the proof of concept. That's the kind of way I work. And then I will execute like crazy once I understand how something works and that I can do it. So in the next 16 months, I started wholesaling cash deals out of state in Florida and Alabama, dozens of deals there. House hacked another 4 unit a year later when I was eligible to do so, which was another $2,000 a month of cash flow. And then combined some seller financing stuff I was learning with off-market deal finding I was learning and executing with wholesaling to creatively find and structure the purchase of 20 rental cabins, virtually no money out of pocket to buy 20 rental cabins that generated me $3,500 a month of cash flow. So within 16 months of purchasing my first property, I was now generating $7,500 a month of cash flow with my 26 rental units. At that point, I had another year left on my military contract or my contract with the Army. I decided that I was going to get out of the Army, move back from Alaska to San Diego. And then my wife and I, once again, no surprise, house hacked a 3-unit in San Diego. I actually debated retiring at that point, but I really thought about it. In San Diego, $7,500 of cash flow didn't make a ton of sense. And I was 26, 27 years old. It didn't really make a lot of sense to retire at that point, especially if I got something good going. What was the point of stopping right then and there? So I found a great government job in the field of environmental health, which is something I'm very passionate about. I joined Sub 2 with Pace Morby, which I will forever be grateful for. And I got really, really inspired to continue growing my portfolio and partnering with others to do so. As we talk about in Sub 2 a lot, it's not just about what you learn. It's not courses. It's not like education per se. What you have is community. What you have is people you can do deals with. What you have is support from people. And I'm obviously the biggest cheerleader for Sub 2, and I credit Pace with so much of my growth over the last several years. So when I joined, it took me a few months to master creative deal analysis, similar to before. It took me to learn the concepts, create my own calculator, analyze deals, and then underwrite lots and lots of deals before I made my first purchase. During that time, I started creating based on what I was already doing and what I planned on doing. I created a really efficient system so I can buy more great cash flowing rentals, and then I could start executing on that. Near that same time, I met my business partner, Adam Catledge. We met at a few meetups and Sub 2 meetups. We connected back and forth, grabbed lunch, hung out a few times, and then started joint venturing or looking at deals together that we could do together, and went into an official partnership in March of 2023. That's the same month that we bought our first deal together. First creative deal. I did my own 20 rental cabins creatively, but first creative deal while in Sub 2. First time we ever raised money for either of us. I guess I also raised money from rental cabins, but it was like a 30-day transactional loan. So a short-term loan as opposed to someone funding us to be able to buy and hold real estate over the long term. And this deal was a Sub 2 pre-foreclosure that generated over $1,000 a month of cash flow at the time. And then we also walked into over $100,000 of equity. Since then, since March of 2020, March of 2023, we've added over $17 million of real estate together. And my cash flow personally is over $20,000 a month for my portfolio. I'm not saying that to flex. I'm not saying that as hey, look at me, I'm so awesome. I'm saying that so you know what's possible. And I'm saying that because, let's get into why am I saying that. we're here to analyze deals, right? I want to show you the various ways that you make money in real estate, plus a bonus way that a bonus benefit of owning real estate. What a lot of us know about and talk about is cash flow or your monthly profit. And there's what some people bank their investing on, which I would never, is appreciation. This is the property increasing in value over time. And then debt pay down. So every single month you make a payment on the debt, like a mortgage payment, let's say, and then the mortgage payment is split into your escrow, which is insurance and taxes. But really what we're talking about is the principal and interest on the loan that you have. Every month when you make those payments, that loan principal is getting paid down. So that debt is decreasing in value. You also get some amazing tax savings through real estate, especially if you do it right, like I do. For example, through depreciation interest payments, I haven't had to pay any single taxes over the last 3 years since I first started investing in real estate. That first property, once my wife was considered a real estate professional, we were able to buy and hold real estate and not pay any taxes throughout the whole time. And then a fifth benefit is the story, which doesn't seem like a lot when you're starting out, but the story is so massive. In the story, by that, I mean, the more great deals that you're buying, the easier it is to buy more great deals, because then people know you as a true buyer. And then the more capital that you're raising and the more great deals that you're buying and the more that you take care of your lenders and partners, the more easy it is to raise capital. So that fifth benefit starts to become more and more and more important as you're buying and holding more and more real estate, because it becomes easier to buy more deals, to when people want to joint venture with someone or need someone to help close or negotiate a deal, they know they can come to me because of my credibility and my experience. When someone has money and they want to get solid returns, whether they want to split ownership or get like a fixed interest rate return, they know that I am a good borrower of their funds. So that story plays a massive role in the growth component. All right, so my buy and hold real estate portfolio. Currently have over 60 rentals, just a hair over 60 rentals, worth right around $20 million. That generates me $20,000 a month of cash flow for my real estate portfolio. The cool thing about real estate is a lot of the, outside of taxes and insurance and some utilities, a lot of the, like the main expense, the debt payment, is fixed as whenever you buy that property. It's a fixed loan payment that you're making. However, rents continue to increase in value, so that cash flow continues to increase per property over time, as long as you're buying in great markets. Additionally, I make $84,000 a month in debt payments, right around $84,000 a month in debt payments. That's principal and interest on my mortgages. And of that $84,000, $35,000 is paying down the principal portion of my debts. So $35,000 is being added to my net worth every single month because my tenants pay rent. That rent is used to pay the mortgage. I keep the excess, the profit, and then the portion of the debt payment that is principal pay down is $35,000. That's being added to my net worth every single month. It's pretty awesome. And then appreciation as well. So assuming a 3% appreciation on my portfolio, which I think the national average is closer to 5%. We've had like insane appreciation over the last couple years, but it's not like historically, that's not like a historical average. But even assuming a 3% appreciation, that is $600,000 of appreciation a year, or $50,000 a month of appreciation. So every single month on the first of I say there's like 2 days I really love in the month. The first of the month, which is when all my tenants pay their rents, and then the 15th of the month when I pay my debts, because I'm getting my cash flow and then I'm paying down the principal debt on my loans. And then obviously appreciation, you don't look at it monthly, you look at it maybe every year, every couple of years, it continues to increase and appreciate in value. So with all that being said, I want to highlight my super investor community. We haven't even started with the actual deal analysis. We're going to go like really in depth into it, but I do want to highlight my super investors community, which is my exact 6-part blueprint. All my knowledge and everything that I've put together, all the tools, systems, SOPs, resources, literally the step-by-step blueprint. If your goal is to achieve financial freedom as quickly and efficiently as possible by buying and holding real estate, ideally using little to none of your own money, and just making it as efficient as possible, and knowing that you're following like a proven path. With that, I include my my ultimate creative finance calculator. I used to sell it. I just include it for free in the super investor community. I'm doing one-on-one strategy calls to set up your custom path to understand where are you at, what do you specifically need to help propel you forward in your financial freedom goals. And then obviously the community is a network of other investors, all with the same goal. This isn't a community where someone's doing business, someone's doing multifamily, someone's like, everyone in there has one clear goal: achieve financial freedom as efficiently and quickly as possible, but safely, right? You want to maximize your returns and minimize your risk on your investments. But you don't want to lollygag, and like if you could do it in 2 years or 4 years, why would you take 10 or 20 years, right? So like everyone's got that same goal, and the path is to buy and hold real estate as efficiently as possible, ideally leveraging creative financing, and ideally raising capital and using none of your own money to buy those deals. And that's exclusively and exactly what this community is for. I also include a ton of extra bonuses. My super investors CRM, I pay extra for Go High Level so I could give free access to everyone in the community. I'm bringing in guest coaches. We have a mindset coach secured. We have I'm an underwriter, right? We have an underwriter secured to come in every single week and provide value and help you analyze your deals. We have my business partner, Adam, is going to talk about CoLiving, one of my favorite management strategies. Our asset manager and operations manager is going to come in and either train you or your operator so that they can help you, so that they can efficiently run your business following a proven blueprint. I also am including a one-on-one deal analysis. So if you have a deal you want me to personally underwrite, and you want, like, this is something you want to do privately, I'm giving you that one-on-one deal analysis, because we do have twice a week deal analysis, Q&A, whatever, like little super investor mastermind sessions. But if you want like a private one, that's also included in there. Just to be extremely transparent, right? For the whole month of November, if you sign up in the month of November, the price is $4.99 a month, and you can cancel anytime. That is 50% off the actual price, because starting December 1st, anyone new that joins is going to pay $9.99 a month. That's twofold. I want people to, I don't want to grow this. I don't want this thing to be a several hundred person community. We're already close to 50. I feel very comfortable in that 1 to 200 range. I don't want 500 people. I don't want 1,000 plus people. Not at this time. I feel like I really want to provide that resource. Oh yeah, great point. Maybe I should post a comment. Sorry guys, I see you asking. Let me drop that in here. So the URL is wonky. I do apologize. It was originally intentional investor. It is super investors. I'll get it fixed after this month. But I do want to highlight that is the URL right there. You're more than welcome to sign up and join. Let me show you some more information about it, and then let's get into it. So I'm gonna have to stop sharing for one quick second. I'm gonna have to share another screen. Boom. All right, I'm just gonna take you inside of the community just so you kind of get a feel for it and see if it's the right fit for you. So yeah, right around 50 members right now. I want to highlight the classroom, or here's a little one pager real quickly. It kind of highlights real fast. This is the November discount for whoever wants to be part of this and be an early investor, early partner, then it's here for you. Oh, thank you, whoever that was. That's awesome to hear. That was awesome. Thank you. I will highlight some good stuff in here. So if you join in the month of November, $4.99 a month, you're locked in at that price. You cancel anytime you want. Let's say you come in, you do your strategy session, you get a copy of my calculator, you speed run through the course, and you cancel in 30 days. I don't care. If you feel like that is the perfect thing for you and that is what's going to allow you to succeed, awesome. I literally want you to succeed. If you only need 30 days, cool, cancel before the next payment. I'm all for that. I'm still giving you the one-on-one session, still doing the one-on-one deal analysis with you. Anyone new is $9.99 a month starting December 1st. Once again, this is the exact step-by-step blueprint that I've created and implemented to provide real estate investors that I provide to real estate investors. So I do a 6-week intensive boot camp. This is the exact same curriculum, but now I can do it at a larger scale for you all. It also includes twice a week mastermind sessions where we analyze deals and Q&A and literally whatever, help propel you forward, plus accountability and all that good stuff. I'll go over the various trainings included, but I include like a 7-part blueprint if you're just starting out. I include 6 core areas, dozens of deal analysis trainings. Obviously, I think it's one of the most important things, so I include tons of trainings on that topic. Free lifetime access to the calculator. Let's see. Access to the Super Investor CRM, access to the exact platform that I used, that I'm using to get all my creative finance deals. I've been working with various wholesalers to create an amazing product where all their deals will be very easily presented for you. So you can just, you don't even have to go check your emails. You don't have to check your text messages, check Facebook posts. All, like, a ton of creative deals will be posted, like 100 plus deals will always be available for you in a very easy way to, and I'll be presenting that next week actually, when we're talking about like easy lead gen. And then every month I'm adding more cool things. Like I said, continued education with high-level guest speakers and educators. If you've met me in someone else's community, I educate in a lot of high-level real estate investing communities. So I'm going to bring them and see if they can add value to you guys within Super Investors. We're going to have accountability and business partners, access to capital and deals from my relationships. So if I have more money than I need at that time, I'm going to help Super Investors raise capital for their deals. If I've already underwritten deals and I don't need, and I'm only buying 1 to 2 deals a month now. So if there's the 3rd deal, 4th deal, 5th deal, and my business partner and I decide we don't want to buy it, I want to give you guys those deals to buy if it fits within your buy box. And then I'm having some in-person masterminds and meetups. Super Investors will always be invited to everything. So yeah, they'll always have access to all that stuff. So that's it on like a really wonky, Word doc. Just want to show you some of the high value. So financial freedom, super deal analysis, lead gen, property acquisitions, mastering capital raising, and systems and operations. And this is like no joke. Like this is thorough. I mean, if you've ever done anything with me, it is thorough as heck. It is detailed. It is extremely high value. Remember, people pay me $25,000 for this training. So it's got to be worth their money, right? So no questions asked at $500 a month. Mastering capital raising. I mean, if you've ever wondered what is capital raising? How do you leverage capital for your long-term buy and holds? Not just fix and flips, which is easy, but longer-term buy and holds. If you want to know the exact scripts I use, the returns, how I think about deals and capital raising, if you want to know where to find capital partners and where I find mine, how to communicate with them, all the systems and tools I use to make it as efficient as possible, all my scripts, my presentations, slide decks, my literally everything, it's all in there. And the twice a week calls. Just quick preview on this. Let's call it the Super Investor Ultimate Creative Finance Calculator. It's no joke. Every type of creative finance deal you can underwrite. Well, sub-2, seller finance, hybrid creative finance deals you can analyze in here. Traditional deals you can analyze in here. Cash deals you can analyze in here. Very simple deal or no deal style. Lets you know if it's a good deal or not based on what you're looking for, based on your own goals. Helps you literally determine what would be different scenarios if you reduce, let's say, the purchase price by X%. When does that become a good deal? If you reduce the seller finance interest rate, when does that become a good deal? And then different management strategies. So I love pad splits. That's my favorite way to, like, renting by the room. That is my favorite way to manage our properties. It gets the highest returns. We have more than enough capital for our partners to make money, and we make money all together. We provide an affordable housing solution, especially because I get to buy better properties and better locations, like better cities, better locations of the city, and then provide that affordable housing option to people who may not be able to afford it otherwise. And then if you this is how I make capital raising an absolute breeze. You analyze the deal. You say, okay, how much ownership is your primary partner going to get? Cash flow, preferred return if there is any. And then it tells you exactly what the returns are for everyone. And then the PML is, so if you have a PML, what do the returns look like? What's your monthly cash flow after your PML? Whatever. All that's a nice breeze. Let's get into the good stuff. I will answer just a few quick questions about this topic, but I want to get into the training for all you that are here. So awesome. There's a ton of people. Oh, Josh, thank you, Josh. Josh joined. I appreciate you, brother. Sarah, great value. Thank you. Glad to be part of it. Thank you. Thank you. Monica. Yes. So Monica, yes, you can do that. I'm cool with that. Do you get access to the course if you cancel? So Lorraine, you get access to the course while you're in the community, right? Because it's part of school. You're paying through school to get access to the trainings and all that. But you get access to my calculator. It's a link, right? You download the link, you get this copy of the calculator. I'll do the one-on-one, even if you choose to cancel, all that good stuff. You're more than welcome to cancel if you choose to. But the course is embedded into the school platform. So you're really paying for access to you're continue paying each month for access to the course as I continue. I mean, I'm not done adding to that, right? As you guys ask very specific questions and all that stuff, I will continue building the course and make it even better and better for you all. And separately, the twice a week masterminds, the guest speakers, guest educators, all that stuff. So if you cancel the course or school, then obviously you kind of lose access to all that, but you still get to keep the calculator, the deal analysis, and all that. So hopefully that answers your question. Oh, David, my man, he's a Army medic. There you go. So I'm going to put this link here again. This is going to be the same link. I'm sorry, it's not ideal, but that is the link. Have fun. So let's get into it. Let me screen share. All right. So if you know anything about me, deal analysis is my bread and butter. So I'm very excited for this one. I was a little awkward and clunky last time. Not this time. This is financial freedom, foofy stuff, stories, sales. That's not my thing at all. But what is good for me is analyzing deals. So let's get into that. Literally my superpower. Jennifer, yes, already used your pitch deck since joining last week. That is freaking amazing. David, so I was Army. Environmental Science and Engineering Officer, 72 Delta, stationed in Fairbanks or Fort Wainwright. All right, let's get into it. Oh yeah, I'm also doing a giveaway. So if you stay throughout this, I've got 3 tickets to Squad Up Summit that I'm giving away to. So it's the general admission. It's like $1,000 or something like that. I'm giving those away for people who joined Super Investor or have already been part of it. I'm going to select 3 names that are super investors, but I'm also for everyone live. I've talked to PropStream. I've got 3 30-day free trials for PropStream software that I'm also giving away. That's not the reason why you're here. You're not here for a giveaway. Maybe it'll push a few people over the finish line to join super investors, but you're not here for the giveaway. Who cares about 30-day free trials and all that stuff? That's like $100 or a Squad of Summit, that's $1,000. I want to educate you and help you achieve financial freedom. And the education I'm going to provide you right now is going to be what helps you out. But if that's what helps push you over the edge, then let's do it. Let's see inside the community. All right. So the 4 ways you make money in real estate, right? We talked about it. Cash flow, appreciation, debt pay down, and tax savings. Plus the story helps you make more and more, raise more money, get more deals. So for most real estate investments, you're simply looking at your cash flow and your entry costs to determine your cash on cash return. Why is that? Unless you already have income from other sources, if your cash flow is negative, then you are paying money to be in that investment. And why would you put $50,000, let's say, to buy an investment that then loses you money every month? The other benefits, appreciation, debt pay down, and tax savings, those don't really matter for the majority of people, especially if you're on your path of financial freedom, if you're not generating cash flow. So that is the first and only metric the majority of people look at. I look at everything, but cash flow is number 1. And cash flow simply is your income minus your expenses minus your reserves. And to quantify that, to say, how do I know if the deal that I'm buying generates enough cash flow for the amount of money I have to put in? That is your cash on cash return, which is your cash flow, your times 12, your annual cash flow divided by your entry costs. So let's break that down, right? Cash flow, income, expenses, and reserves. And your expenses are your mortgage payment, any other debt payments. If you're paying property mortgage insurance, HOA, taxes, insurance, property management, utilities, anything that you're covering on a monthly basis for the most part, those are your expenses. And then you're also subtracting away reserves. A lot of newer investors make this mistake and they think of cash flow. Well, actually, they think of it even worse. They think of cash flow as income or rent minus the PITI or the mortgage payment. They don't even account for all the other expenses. If they have to pay management, if they have to pay utilities, if they have to pay an HOA, they just look at income minus mortgage payment or PITI. Not ideal. And then a lot of maybe slightly higher level investors will do the full expenses, but they won't account for reserves. Well, in reality, when you own a property, things are going to come up. There's going to be maintenance issues and capital expenditures. For example, maintenance, you got to send a plumber out. You got to change out a light bulb. I don't know. Someone's got to do those things. They got to take care of your property. And then capital expenditures are money you're setting aside for very big expenses that will occur. For example, you're going to have to replace your roof at some point. You're going to have to replace your appliances, your flooring, your paint, things like that are not really just like maintenance issues, like a simple plumbing fix, but there's money you've set aside because who cares if you made $10,000 of cash flow over, 2 years, if at that 2-year mark, you have to now pay $20,000 to replace your roof or, $10,000 to $20,000 to replace your roof. And you never set aside the money for that. You lost all your cash flow that you thought you had because you weren't setting aside capital expenditures. Same for vacancy. So 8% of your total, these are all a percentage of your rental income. 8% vacancy translates to around 1 month of the year your property is vacant. Even if your property is rented out for a full year, you're going to have some costs for turnover. You're going to have maybe a little bit of gap. Boom. There you go. Can you see my whole slide? Let me drop this stupid thing. Boom. All right. I think you can see it all now. Perfect. Thank you for letting me know. And then, so as I mentioned, your reserves are a percentage of your income. We, as a rule of thumb, set aside 18%. 8% for vacancy, which translates to 1 month of the year the property is vacant. Maintenance and CapEx, they say 5 and 5 or 10% total for those two. So your cash flow income minus expenses minus reserves, you need to account for all of those. If you don't, you can do whatever you want. You can put on your spreadsheet that it's income minus PITI or income minus expenses, but then know you're more than likely setting you and your business partners, your capital partners up for failure if and when things inevitably go wrong. So it's ultimately up to you. Whatever you put on a spreadsheet, it doesn't matter in reality after the fact, but what you're doing when you're analyzing deals is seeing how can you maximize your returns and minimize your risk, and you do that before you ever buy a property. Once again, cash flow only takes you so far. Cash on cash return shows you how profitable your initial investment is, right? So annual cash flow, and I changed the language here, right? Initial money invested or entry costs. Same exact concept, but I just want you guys to understand it's the same thing, but people, I don't know, they interchange those. So I wanted you to see both. Once again, your initial money invested or your entry costs is the down payment you have to make. If you have to pay the seller anything or a down payment on a loan, there's an agent involved. You have to pay agent commissions. If there are any closing costs that you have to pay, title, inspections, transact coordinators, all those closing costs, any upfront rent ready repair costs. So if you have a property but needs $3,000 in renovations, it needs new flooring or new paint before it can be rented, you need to account for that as part of your entry costs, even though you're going to make that payment after you take over the property, because that is part of the cost of making your property profitable. If there's a wholesaler assignment fee, things like that are part of your entry costs. I have a full breakdown in a slide coming up. Here you go. Entry costs. So for me, I think of 9 different entry costs within my business, right? That's not the same for everyone, but it's that cash to seller or your down payment, any arrears. So if you're buying a creative deal and the seller is behind on their mortgage, you have to pay that. If there's any liens they have to pay off by closing, you have to pay that. That's part of your entry cost. Any agent commissions, that rehab or furnishing costs. So once again, rent ready costs. So if you're doing a short-term rental, maybe you need to paint it nicer, you need to furnish it. All that is part of your rehab or furnishing or your rent ready costs. Closing costs. I separate certain parts of my closing costs into admin costs. So when I'm buying a property, I'm setting up a new LLC. I'm inspecting the property. I'm paying a transaction coordinator. Those are costs that I have to pay for buying this property. And I separate it as a separate line item because a lot of those will be reimbursed. I have to pay for those during the process of, finding a deal, and we're raising money for it. And by the time we close on it, those are costs that we have to pay for and then get reimbursed at closing because we have to pay them up until the closing day. The closing costs are literally what we're paying to the title company essentially at closing. If there's an assignment fee, so if you're buying a deal from a wholesaler, there's going to be an assignment fee. This is unique to the way that I buy real estate, and Pace talks about it sometimes now and a few others, but an acquisition fee. If me, as someone who is finding these great investment opportunities, structuring all this, renegotiating it, spending time and money to find these deals, well, when my capital partner funds the entry costs, there's a small, sometimes, not always, but sometimes there's an acquisition fee included, and that acquisition fee is kind of how I can get paid $6,000 to $15,000 on every deal that we buy. Understand, if you're buying a deal from a private money lender or private money partner, or you're buying with them and they're funding the deal, it's not like this is just free and clear income that you generate like an assignment fee for a wholesaler. You guys are buying that deal together. So it's essentially a loan that you're either paying interest on to a PML or your private money partner. You're going to have to reimburse them that at whenever you sell the property or refinance it in the future. But it allows you to have that active income now. So then you don't have to worry about wholesaling, another job, whatever. So you can make ends meet financially for you and your family while you continue to buy great deals and bring more great investment opportunities for you and your business partner. And then carrying costs. So I think a lot of people make this mistake. They do not account for some reserves when they buy a property. They don't save money up front, and things come up, especially early into an investment, or maybe you can't renovate it or furnish it quickly enough, and now you're paying 1 or 2 mortgage payments. Where's that money going to come from? Either if you're doing it yourself, that money has got to come from you, and you better have that money set aside for it. Or if it's from a capital partner, well, it's really awkward 1 month or 2 months after buying a property if you have to ask them to put more money into the deal. So those are my 9 entry costs that I account for. And then people ask how much capital to raise. We're raising for the full entry costs. Depending on the management strategy, your rehab and furnishing costs will be a little bit more. But this is the amount of capital that you're raising. And I raise this amount, 53,280, I'll raise 53,500. Like, I like to have it end in 500 or 1,000. I don't want random numbers. And part of that is because if we're paying a PML or a PMP, it's nicer to have a round number when you're trying to calculate their overall returns. And I can show you all that at the end if you have questions about where to find on the calculator or how to do that. I'm happy to go over all that. But that's next week's training as well. Once again, cash on cash return. So this is the piece where I'm talking about, like, how do you find a deal and then make it even better? So if your goal is to increase your cash on cash return, because your cash on cash return is whatever money's invested, whether it's you or your partners, how much return are you getting each month in cash flow annualized, right? And the only way to drive, like, the higher the cash on cash return, the better the cash flow that money you invested is generating for you, or the better the investment overall, we can just say at a high level. There's other factors like the ownership benefits, but from a cash flow perspective, cash on cash return is quantifying how much money you're getting back based on your initial money invested. So only two ways to actually increase your cash on cash return. Either increase your cash flow, right? Cash flow is your numerator. Either increase your cash flow or decrease your entry costs or the initial money invested. The only way to increase your cash flow is to either increase the income or reduce the expenses. You can move other things around on the spreadsheet, but you can't actually change a lot of the deal. All you can do is increase cash flow and decrease entry costs, and I'll break that down, like what that actually looks like. So to increase cash flow, what are the ways that you can increase the cash flow? You can renovate the property and get it to market condition and then rent it out at market rent. Obviously, you have to put some extra money in to get it there, so you have to see if it's worth it or not. You can implement an advanced management strategy, which is very common in the way that I do it. So we primarily, we have midterm. I have long-term rentals, midterm rentals, short-term rentals, and my favorite is pad split or rent by the room. I'm doing a lot more rent by the room properties now. And then you can reduce your vacancies. That one's kind of hard, but just understanding that you can pre-list your properties before they become available, so that you're getting them rented out as soon as possible. And just like minimizing that like wasted money on vacancies. It's kind of hard to quantify that in a spreadsheet when you're buying a deal, but I understand when you own it, the less time between one tenant and the other, the more money that you're making and the less you're wasting on vacancy. Okay, so separately, where we talk about increasing cash flow by increasing income, more often than not, what you can do is decrease expenses. You can reduce the debt payment. I'll get back to this because that's the main one. You can increase your down payment. I know this seems counterintuitive and it's not always the best thing to do financially because it increases your initial money invested or your entry cost. But if you increase your down payment, you're lowering your loan. So then you're decreasing the amount you have to pay monthly on that loan, which theoretically is increasing your cash flow. Is it worth doing that or not? You have to analyze your cash on cash return to see if adding that extra 10, 15, 20K to the down payment is better or worse based on what it does for your cash flow. You can shop around like your insurance and like whatever, renovations, whatever, all those kinds of things. You can shop these things around to minimize your monthly expenses. Maybe you invest in solar instead of paying, your utility company, things like that. Offloading utilities to tenants. You can self-manage your properties, which I would never advise to anyone ever. I would, first of all, it's not the highest and best use of your time as a real estate investor. The best use of your time is to find more great investment opportunities and to find great capital partners that you want to work with, buy more deals together, not try to save $50 or $100 to manage your own properties. And then reducing debt payments. This is the number one thing that you can do. And you could only really do that prior to closing on your investment. So this is what I spend a lot of time doing when wholesalers provide me deals. I am looking at their investment as a lead, right? It's not a deal. I'm looking at it as a lead of a motivated seller. My job is then to say, based on my analysis skills, does it make sense? Can I somehow reduce the entry cost, or can I somehow reduce the monthly debt payment? If it's on a straight sub 2 deal or a traditional loan, like it is what it is. And a traditional loan, new one, you can pay points to reduce your interest rate. You pay that up front, reduces your interest rate and can increase your cash flow. Once again, is it worth it or not? That's hard to say. You have to analyze it. As Neil said, usually never does it make sense to increase the down payment as a way of increasing your cash on cash return. I would say that's not always the case. There are certain instances where it could make sense. It depends on if you're using your own money, if you're working with a private money partner, private money lender. But at the end of the day, there's no simple rule of thumb. Analyze your investments, because if it does go wrong and you didn't analyze, you can only blame yourself, honestly. Doesn't mean you're like a bad person for it. Just understand that like extreme ownership is like one of my things. If I were to say one of the super investors' number one superpower, it's going to be extreme ownership. Every decision you choose to make, every action you choose to take, every decision you make is up to you. You choose what you're doing with your time. You choose if you're buying investments without analyzing them effectively. You choose if you fudge the numbers and it doesn't end up the way that you thought, that's fully on you. But reducing the debt payment. So if it's seller finance, can we reduce that? Does reducing the interest rate, maybe even increasing the purchase price, or does that make sense to focus on reducing the interest rate? Almost always, yes. That is my number one goal, is to reduce the interest rate on deals, especially on seller finance loans or hybrid loans, or like when it's sub 2 and seller finance. The other thing you can do is decrease entry costs, right? We talked about the 9 different ones. A lot of them are non-negotiable. You can't change it. You could theoretically, you can modify a loan and offset arrears. It's not good practice. It's, I don't do any of that. I don't modify loans to then, forego arrears or whatever. I just call it non-negotiable. If you're doing that in your business, that's cool. Do that. Rehab and furnishing. Yes, you can, get a few bids, and one's a little cheaper. You can be a little more, a lower budget for furnishing your properties, but really it's not negotiable. Like either way, you have to pay that cost. Reducing that is only setting yourself up for kind of a disadvantage. Closing costs to your title company, can't really change that. The admin and reimbursement costs, like, could you set up your own LLC and save like $400? Sure. That $400 and the time that it takes to do it, is your time is probably worth more than that $400. So focusing on that as a negotiable doesn't really make sense. Carrying costs, yeah, you can save no reserves and make your numbers look good, but that's like a ridiculous way to buy and hold real estate. The things that I focus on: down payment to the seller. Can I reduce the down payment to the seller so that I reduce my entry cost and increase my cash on cash return? What about the agent commission? Just because they're used to 1%, 2%, whatever, doesn't mean that I need to pay them that amount. Maybe we negotiate and say, hey, I want to get this deal done, but I could only get it done at this total entry cost. Wholesaler assignment fee. I very rarely ever try to negotiate a wholesaler assignment fee unless something that I was not anticipating comes up. Or something like comes up that just changes my overall numbers. And the only thing left to do is negotiate the wholesaler assignment fee. Why do I try not to ever negotiate this? Because I care about my relationship with wholesalers, so they continue to bring me great deals. This is the same reason why we're partnering to provide like this phenomenal resource of like all these creative deals just like brought to you, like in your face, beautifully presented, instead of, emails, text, all that other stuff. So why would I try to burn a bridge with a wholesaler that can bring me 10 plus deals and have a good working relationship with them, when where it more likely makes sense, if possible, to reduce the down payment to the seller or any agent commissions, because we're probably not working with them ever again. I'm not saying I want to give them less money, but if my numbers say I cannot buy the deal unless we reduce the entry cost, well, I present that to them. Doesn't mean they need to sell it to me. They have to still accept that this is a deal that they want to move forward with, but I present, hey, this is the only way that I can buy this and it makes sense for me and my numbers. I'm an investor, so I need to make sure that the money I'm generating each month justifies the money I put into the deal. These two things are not making sense. An acquisition fee. So like I mentioned, sometimes we have no acquisition fee because we don't really need an acquisition fee because we have solid cash flow and all that good stuff and other income streams. However, we can adjust that depending on how great the deal is and great the investment opportunity is, or if it's like a multifamily or whatever. For us, it's between 6,000, let's say 5,000 to 15,000. We try not to ever exceed that amount. Really, it's between that 6 to 10,000 for us personally. So I highlighted it, right? 2 ways to increase your cash on cash return: increase cash flow, decrease entry costs. We talked about increasing your income, reducing your expenses, and how you can, like, what of your entry costs you can reduce. So what should you focus on? Literally all of it, all of it. For me, it goes in this order. I focus on increasing my cash flow first by decreasing my expenses, especially the debt payments and creative finance deals. If it's a hybrid or has any seller finance component, I'm working to try to get that as close to 0% interest rate as possible. Ideally, I love the 0% interest rates, not only because it increases my cash flow, because every single payment I make on that is also directly adding to my net worth. It's phenomenal. It's got multiple benefits there. And then I focus on decreasing my entry costs as another way to drive up my cash on cash return. And then last, I will focus on increasing my cash flow through increasing income. But I don't want to overpay for a property that only makes sense with a strategy. So like I'm forcing it to work. And like, oh, this is the only way I can make it work. Sometimes I buy deals, especially CoLiving, pad split, that only works for that model. But I understand that I'm buying a better property, bigger home that gets better ownership benefits. I'm going to have solid tenants in there because we're providing them a great place and a great location. And I'm minimizing my risk with like rent by the room, because if it's long-term rental and it's vacant, I'm getting $0. If it's a pad split, and even if I have 50% vacancy, 4 of my 8 rooms are rented, I'm still making 50% of my income that makes me very comfortable. I really enjoy having that income stream, even when we're not at full occupancy, where you don't always get that from your long-term rentals. All right, Ultimate Creative Finance Calculator. So I showed it to you guys a little bit earlier. I don't think I'm going to go into it again. You see you saw, what's included. I go over long-term rent, midterm rent, short-term rent, and then rent by the room or pad split. Handles all types of creative finance transactions. It includes like balloon. It's got amortization for both your seller finance, your sub-2 loan. It automatically spits out scenarios in which the deal can make sense for you. Automatically tells you deal or no deal based on your goals. It does a 30-year long-term analysis. Like all of it is included in there, but it's exclusive now to my super investors community because people pay $500 for it. I think they paid between $300 to $500 for it, depending on when they bought it. And it's a really powerful tool and amazing, but I want to really help people not just use it, but like really understand how to maximize the use of it. So moving forward, it's only part of the super investor community. All right. Once again, I'm recapping the 4 ways you make money in real estate and the bonus. And then I kind of want to make it really tangible for you so that you can truly understand like how it like translates for my portfolio. Cash flow is your monthly profit. Appreciation is the property increasing in value. Debt pay down, the lower the interest rate, the more your debt pay down as well, or the further along you're on an amortization schedule, the higher your debt pay down. But that is adding to your net worth each month. Tax savings, keep more of your money, more of your income, right? You keep more of your income. And the story helps you continually buy more great deals. Every deal that I do with a wholesaler, they're more inclined for them to bring me more deals. Every time I raise money from someone or successfully pay back a lender or partner, it's easier for me to raise more and more capital. It's the same reason why now I can get into larger assets at the same time through raising capital, through my credibility, because of the fact that I'm developing this amazing story. And it's cool that literally a lot of you guys have been part of this whole story, which is amazing. I guess I should share some of these awesome comments. Calculator so helpful. Calculator is bomb, 100%. All this is amazing. I will go back to some of these comments and answer them during the Q&A piece. Oh, wait, I want to ask you guys a question. So drop in the chat. What do you think of these 4 benefits? Let's focus on the first 4. Which of them make you wealthy and which of them make you financially free? Hopefully I've been able to paint that picture for you already, but if not, I will quite literally show you how it benefits me. So please drop what you think makes you financially free versus what makes you wealthy. Yeah, Patrick. So there's tons of training on the calculator in the classroom. Plus, when we do our live deal analysis in the, as a group, all of that, like all of it is, we do it all together. There's tons of training on the calculator. And it's also in my free Wealth to Real Estate community. If paying $4.99 a month is too much for you right now, like no worries. I completely understand that. I may not have done it years ago because I did a lot without mentors at the time, but working with mentors massively changed my entire trajectory. Just to give you one example, one of my one-on-one mentees, as part of my Veteran Investor 6-week boot camp, she was someone who's fix and flip, joint venture on a few wholesale deals, but wasn't really buying and holding real estate, like cash flow and real estate. And she never raised money before that point either. So within the 6 weeks, actually at the 5-week mark, we were able to get her first buy and hold property, 4-unit property that generates over $2,000 a month of cash flow. She paid $25,000 for this one-on-one. So for this 6-week boot camp. And so the $25,000 was made up in cash flow in 1 year. That cash flow is going to make up the $25,000 that she paid. More importantly, that $25,000, she raised $140,000 to buy that deal. So roughly 6 times the amount that she invested, she was able to raise on her deal. So it seems like a lot of money, honestly, when you look at it in a vacuum. But that $25,000 is made up in her one acquisition in cash flow, and she raised roughly 6 times that amount in capital to be able to buy that deal. More importantly, now she can do that over and over and over again. You guys get all of the same access, all the same trainings, tools, and resources that she had, plus the CRM, plus the one-on-one strategy session, plus the twice a week masterminds, all of that for $4.99 a month. If you choose to join starting December 1st, I'm sorry, I'm warning you now, it'll be $9.99 a month, and I will never make it any cheaper. I don't want to grow a massive community. I want to make sure that people that I'm doing this with, especially those starting in the month of November, we're making massive progress together towards your financial freedom. So I'm offering that 50% discount, $4.99 a month, if you you join in November and you can keep that lifetime. That's your price until you decide to cancel. If you cancel, obviously you don't get access to the community. You keep getting access to the calculator, and obviously we did our one-on-one and all that good stuff. All right, so a lot of you answered it very well. Neil, I don't agree fully that that you can't get cash flow these days. I'll talk about that later. I mean, I'm making over $1,000 a month on every deal that we're buying. It just depends on what you're looking at, where you're looking at it, how you're financing it. I mean, there's a lot of factors. I'd be happy to dive into that deeper with you as well. All right. So for me, the financial freedom comes from my 60 rentals that generate $20,000 a month of cash flow. That means I passively, because I pay an operator I have management. So in my business now, like where I've scaled to, I have a fractional CFO and a bookkeeper that handles the majority of finances. We have an operator/asset manager plus 2 virtual assistants underneath her who between them and then like Airbnb and PadSplit and the platforms that we utilize manage all of our assets. So for me, my free and clear cash flow, separate from my partner, separate from what we pay our team, is $20,000 a month of cash flow. That is what makes me financially free. Whether I'm in Boston for 2 weeks or like Boston in the Northeast for 2 weeks, whether I go traveling, go to fishing in Alaska, I'm generating $20,000 a month in cash flow. Obviously, it fluctuates a tiny bit, like plus or minus, but that is what makes me financially free. I no longer have to exchange my time for money. It's the most amazing thing ever. And investing is what allows you to do that. Investing in assets, like you can do it in stocks. It just takes a lot longer and you need more money to do it. You can do it as a lender, but you need a lot more money to be able to lend money. You can raise other people's money to lend, but now you're playing a risky game, especially if something goes wrong. The best way for me to do it and the best way that I've done it and the best way I can educate other people to do it is buying and holding real estate, great cash flow and assets, and then raising money to buy those deals, because you're not asking for money. You're not borrowing money. You're providing someone who wants to work with you a great investment opportunity, right? And then what makes me wealthy every single month, that $35,000 a month principal pay down, and it keeps increasing each month as we move further and further along our amortization schedules, or we further along holding an asset. Every month, that $35,000 is real time today. Of the $84,000 we're paying in debt, roughly $35,000 of that is going to paying down the debt, adding to my net worth. That 3% appreciation, $600,000 a year or $50K a month. And this was fairly conservative, but because some of my properties are in literally San Diego, California, which historically appreciates massively, and they're huge, beautiful properties. One of which is where I'm going to be. Yeah, Patrick, I'll get back to your question. That'll be a perfect question for the end, and I will definitely highlight that. So 3% appreciation is adding $50K a month to my net worth. So I'm generating around $20,000 a month to cover all of my needs. I don't spend $20,000 a month. If anyone knows me, I drive a Honda Civic, which I love. I love my Honda Civic. We don't have this huge property. I mean, we live near Monterey, but we don't like live in the city. We moved east, 20 minutes east there, so we can buy a bigger property with bigger lot. But it's not this like insanely expensive property. And we leverage creative financing to make it happen. So it's like great terms. The things I do love spending money on, my family, travel, I love vacationing. I love exploring. I love adventuring, but I couldn't even fathom spending $20,000 a month. Doesn't mean I'm not going to continue growing that, because as my mentor Pace taught me, money is a vehicle to be able to like cause change, right? So me growing my cash flow, me growing my influence, me growing my net worth allows me to focus on the causes that I care about, which obviously I said my family, travel, all that personal stuff, but I'm very passionate about protecting the environment. I'm extremely passionate about veterans, especially homeless veterans, veterans with behavioral health issues, veterans who need help and support that they don't have access to right now, or they don't know they have access to. And then I don't think a single freaking child in our entire country should ever be hungry. I don't understand. And I was having this conversation earlier. We do not have a food production problem. We have a food distribution problem. We have a selfishness problem. Before we ever give money to anyone else, it should go to making sure that the people in our country are taken care of, especially children. Like no child should ever go hungry. As someone who has had to struggle with a mom who was moved to America, I'm first generation American. She had to work multiple jobs. She struggled to make ends meet, in a whole new country, barely learning the language. I don't think a kid should ever have to worry about, a meal. Like I just can't even comprehend it. Like they should be well fed. And that's a big part of what I spend a lot of time and energy and donate towards. All right. Once again, it was mentors that made all the difference for me. And I hope I can be part of, maybe I'm not your mentor, whatever. I hope that I can be a part of your financial freedom success, whether it's for 1 month, 3 months, a year plus, whatever that looks like. I hope I can make, maybe it's just YouTube, maybe it's Instagram, maybe it's my free wealth of real estate community. Whatever it is, I just hope I can be a part of making a real difference on your path to financial freedom, because I know that once you are financially free, you have time freedom, financial freedom, you can really pursue all of your purposes and passions in life. I could be making a lot more money if I chose to work more hours a day. I really love that I only have to work 4 hours a day from literally anywhere in this world. I can work as long as I have internet, right? I love that I can stop working at any time of the day. I can block off any part of my schedule to go to the aquarium with my baby. So we're going to the aquarium again, I don't know, sometime next week. Like, I love to just be able to do the things that I want to do and not have to worry about money anymore. It is an amazing place to be. And I want the same for all you guys. You know, if you're the right fit for it or not. I don't need to really sell this. Here's the gist of it, right? I'll leave this up for a second while I answer a few questions, and then I'll do the giveaway. All right, guys, if you had a good question, can you drop it again? Because it's very hard for me to go through and find it all. Okay, Dan out here flexing his EMD business. Good for you, brother. Keep making your money. Drop your blinks, connect with each other. I love this. Nick's got a full-time. Oh, he's a full-time worker. Yeah. Oh, this is my man, Nick. I love Nick. Nick's a super investor. Karen, look at that. Karen, you're a private lender. Karen, stop being a lender and start buying and holding real estate, the super investor way. All right. Gary, yes, all of my tenants, I've literally never had a tenant not pay and without first notifying me in advance that they're going to need a delay. And I'm a really cool landlord. Like, I don't allow anyone to take advantage of me, but we have very strict policies. I'm like, okay, by the 5th, you're late. The 7th, we do this. It depends on the state, right? It's a little bit different where it's at, but you have to really set like your standard in your lease, but then you also can be like a good, normal human being, especially if them paying 5-10 days later really makes a massive difference in their life. So I really take care of my tenants. I take care of my properties. If there's ever a single issue, plumbing, whatever. I mean, if they say anything, if they need a cleaner in there, without questions asked, I take care of my tenants. They have always taken care of me. Have I also been fortunate and lucky, especially that I had paying tenants all throughout COVID? For sure. But I think if you do good to your tenants will do good to you. Are there bad apples? For sure. They're definitely out there. I'm not overly worried about that. All right, let me change this. I'm going to block my little face a little bit. Boom. All right, let's see what other questions. Yep, Josh, it looks like you used the link to join. I appreciate you, brother. Sarah, step-by-step, so helpful. I agree. I mean, whether you have a deal or multiple, having that step-by-step blueprint just makes it massively beneficial. Remember, I'm doing the giveaway in just 1 second as well. Let's see. Gabriel, you're right. Cash on cash, mostly. Internal rate of return is used for multifamily because then you have to plan an exit, and that's that's not as common in single family or single family, small multifamily. It's usually for larger multifamily. Neil, I've never seen putting. Yep, we talked about that. Yep, Dorina, all about the relationships with your wholesalers. I wholeheartedly agree with you. It's helped me massively. People are loving the calculator. That's awesome. Thank you guys. I appreciate that. Neil, 100%. You guys were, for the most part, I think all of you are right. What makes you financially free? What makes you wealthy? I hope my training did a little bit, but I think you also already knew that, which is great. James, on your PML, what time duration do you use to pay back and 100% cash flow dedicated to that? So for my prime money lenders, we'll talk about this next week. Actually, that's a perfect training for next week. If you can't make it, register and you'll get the recording. That's exactly a topic I'll be talking about next week. I don't want to conflate that with this one. Boss moves. Thanks, Jamisha. You're a beast. Patrick asks, forgive the ignorance, but doesn't that mean you make only $333 a rental, 20K divided by 60? Yes. So remember, I have private money partners and private money lenders. I have a business partner, and even the first, remember when I said I make around $3,500 a month for my 20 rental cabins? I don't know what the math is on that, but that's definitely not $500 a month. So you make over $1,000 a property, but you split that between, for me, I have a business partner. We have capital partners. So whether they're PMLs or PMPs, they're getting some of that. But I would never have been able to scale without my business partner. I never would have been able to scale with only using my own money. So I wouldn't focus too much on like what your personal take home is. Make sure you're buying great investments and then see what your return is and see if it's worthwhile for you. But 20 rental cabins that generate. Yeah, so I only make 170. I mean, these are 20 rental cabins, so they make around 175 a month in cash flow. So that skews this down massively. A lot of my, and I've had long-term rentals and midterm rentals. What's really benefiting and accelerating my cash flow is these co-living or rent by the room properties. We can see $1,500 to $2,000 of cash flow on just one property. Thank you guys. Seriously, thank you guys for this positive feedback. I appreciate it so hard. Yeah, Patrick's joining. Look at you. Appreciate it, brother. If you're going to join, I would join right now because I'm picking the names of people who are going to get I'm going to look at who joined and who's there, and I'm going to pick 3 names for who I'm giving away the Squad Up Summit tickets. So let's do that right now. Is there anything worth sharing? Okay, I'll show this for a few seconds. I'll do this for a few seconds. I'm going to see who joined. If you guys need the link one more time, remember, no pressure to join. If it's not the right fit for you, I don't want you in the, if it's not like something you're really passionate about and you're going to be dedicating your time and energy to, don't do it. Like, you're doing yourself a disservice. I don't need your money. Like, don't do it for me. Do it for you specifically. If you want to become financially free and you want the step-by-step path to do it. I don't know who else is offering this. So I'm really trying to help make a difference in your life. If you want that, I'm for it. If you don't, no worries. Here's a 7-day free trial for PropStream. If you want that, go for it, grab it. It's one of the tools I utilize to get rental comps, to get ARV. I don't take it at face value, right? I do all my own analysis, but it's a good additional data point to say, okay, this is what they're thinking. This is their comps. And then what I really love it for is pulling mortgage data and like other information about the owner. I don't really like do my own lead generation anymore. So I'm not really using it for like pulling lists and skip tracing and all that. I use it as data for when I underwrite and analyze to buy deals. Let me drop the link one more time. And then let me choose our winners. I'm going to wait one more second. What I can do is choose the 3 PropStream ones. Right now I can choose that. So here's the link. I don't know if there's an easy way for you to do it, but I don't know if I could like add a button. Whatever. I'll get better at this in the future. This is good for now. All right. So there it is right there. If you want to join, I'm going to look and see at the new members and all the members in general. Oh, awesome. Thank you guys for joining. That's awesome. Thank you. All right. So we're just at 50 now. Incredible. Let me choose all right, 3 PropStream. Who does not have, I don't know if you'll get the free 30 days if you're already on PropStream. So if you are not on PropStream, can you drop a comment so that you'll be one of the 3 selected. Like, I'll just choose 3 names. So if you do not have a PropStream account, can you drop a comment real fast for me so then I can select 3 winners for the 30-day free trial? And then in the meantime, I will. Everyone has. Art, you do not have PropStream? Neil, you do not have PropStream? I'm going to just give it to the 3. All right, these are the 3. That's it. Art, sorry, Nadine. Art, wait, whoever's a super investor, you don't need it. I'm actually already giving you access to PropStream, so you're good. So we have, let me stop it now. Neil, you should be a super investor, but you're not. It's okay. I'll give you the 30-day free trial to PropStream. Can you guys take my info? Just text me your email. There's my info. Text me your email and your name. Just send me your info, and then I'll connect you to get you that 30-day free trial. So I have Neil, I have LaShawn, and I have Steve Podlaski. Perfect. Those are the first 3. That's it. I like that. I'm not a random guy. I don't even know how to randomly choose. So those are the 3 I'm choosing: Neil, LaShawn, and Steve. Let's do the more fun one, the giveaway for Squad Up Summit. And if you are not, and anyone who didn't get that, take the free trial, get the 7 days and see if it's a good fit for you. Just cancel if you don't like PropStream, right? I mean, I like it. I use it for all my analysis. I've been using it for years now. I even used to use it as a wholesaler. So, I mean, obviously I like it, but at least get the trial and see if it's a good fit for you. Let me now choose the 3 for Squad Up Summit. I'm so excited for Squad Up Summit. If you're part of Sub 2, this is it doesn't matter what community you're part of. This is the biggest event of the year for real estate investing. So let's see. All right. And I'm going to ask you if you already have it, because if you already have it, obviously I want to give it to someone else. All right. Let's see who is commenting a lot and who's a super investor. Gary Schwartz. You still here, Gary? You still here, buddy? Betty, Jamisha. Yes, drum roll. I wish I could do that. Love to squat up. Hey, Lisa, squat up. Oh, is Gary not here? I did see him comment all throughout, so you don't have to actually. Oh, Gary's here. Gary is here. Gary, do you have a ticket to Squat Up Summit? Yes, Gabriel's got a. I want to go Squat Up, winner, winner. Yes, Gary, you are here. You are a winner. I will message you later. Thank you for that. Hey, whoever just joined, thank you. I just heard a cha-ching. It's pretty sick. Oh, are you kidding me, Mr. Pipes? Yes. What an amazing dude to join. Great connecting with you over the last. I mean, man, we stayed at the same house together for a while. All right, let's see. Who else do we got? All right, let's see. Who's someone else I saw commenting a decent amount? Oscar Hidalgo, you here, brother? Are you here? Is Oscar here? Like I said, you don't have to be here anymore. If you were one of the super investors I got. Oh, Oscar's here? All right, do you have a ticket to Squat Up Summit? Oscar, I need to know, do you have a ticket to Squat Up Summit? Because I want to give it to someone who doesn't. I don't want you to take it and then sell it, because I think it costs like $1,000. So you do not have one. Oscar, number 2. Thank you. Oscar, you are number 2. All right, let's go for one of the newer guys. Who's the first person to join? So Joshua Reed, are you here? I know you got a busy fireman job, but so Mike, it includes the free trial, includes a 30-day free trial. So Super Investor is going to include a 30-day free trial to PropStream. And then I'm working on getting some more stuff for you guys. But for right now, it's a 30-day free trial. So if you're in Super Investor, I'm going to already get you a 30-day free trial. So I don't want to give that. There's no point. You guys are already going to get that anyway. I know I can do that at least for the people that join in November. Hopefully I could do that for longer. All right, so the first person to join during this was Joshua Reed. We're going to go Joshua Reed. I appreciate you for joining literally as soon as I put it up there. The link was there. So my third and final winner is Joshua Reed. You're here, Josh? Do you have a ticket to Squat Up Summit? If you do, if you don't, I'm going to give it to Monica. If you do have a ticket, if you have a ticket, I'll give it to Monica. If you don't, then I'm going to give it to, then you get it. You do not have a ticket. All right, Joshua, you are our third winner for the Squat Up Summit. Thank you guys. I'll coordinate with you guys. I will make sure that I get your tickets right away. I know they're starting to fill up on their general admission. So you might even be able to upgrade a VIP or something like that if you want. So, all right, 3 winners for Squat Up Summit. Gary, Oscar, and Josh. And then my 3 winners for the 30-day free trial for PropStream were Neil, LaShawn, and Steve. Message me so I can get you guys those trials. Thank you. If you guys have any more questions, I'm going to drop these. Here's if you want to join Super Investor, please do so. If you're going to join, please don't waste your time and join starting December. Why would you pay double if you don't have to? It's up to you. I don't actually care. It's better for me, I guess, if you wait till December. But ideally, you join this month and save 50% until you decide to get out. So let me. I don't even. I'm pretty transparent. I'm pretty direct. That's why it works with me, right? Because I'm very direct. And if you think you're going to join, and I'm not going to hold you accountable, if you think you're going to join, you're going to try to get shiny object syndrome. If you think you're going to join and your mindset prevent you from raising money, if you think you're going to join and you think whatever, I'm gonna force you to succeed. I'm going to make you succeed. And for the people in my Super Investor community, I'm also bringing in my extra money and deals for you guys. Who better to give deals that I'm not buying at the time, but that are good deals? Who better when I'm over raising money than to give it to the Super Investor community? Because I already know you are thorough. You want to take care of your buyers, or you want to take care of your sellers, so you're a good buyer, and you want to take care of your lenders, so you're a good borrower or a good partner. So those are the people that I'm going to help out. My man Mike, yes. All right, I'll leave this for another second, and then I want to go eat dinner with my baby. And well, I guess she doesn't really eat dinner. She just started. She had sweet potato first, then avocado, then split peas, then carrots, which gave her some stomach issues. So no more carrots. Thank you guys, man. I love seeing. I love you two my lenders here saying good stuff about me. That is so awesome. That is the best feeling in the world when your sellers and your lenders and your wholesalers like that you work with, when all those people are saying good stuff about you, that is a good sign. That is a very good sign. So I appreciate you. Doesn't mean I'm perfect. I got plenty to learn, plenty to do. You guys get to see it in real time, and I cannot wait to help you guys on your journey. So Mila is a super investor kiddo, 100%. Man, it's kind of fun with all those dollar signs, those cha-chings. I kind of want more of those. I'll invest with anyone who joins. Gary, my man, look, Gary. I'll invest with anyone who joins. Look at Gary, you are on the spot now. Mike, oh man, I love to see my lenders and partners in here too, because one of the best reasons why, I think there's two reasons why people lend. They lend to earn a return or like ownership benefits, or they lend to learn so they can do the same thing. So seeing my lenders and partners that a lot of them fall on this lend to learn is like the best feeling ever, because you're now not just going to make money by lending to me and we own together, but you're also going to make money by doing this for yourself, raising your own money, buying your own deals. You're going to get better returns. You're going to have control of where you're buying, what you're buying. I literally love to see it. That is so incredible. Thank you guys. You want to lend to learn. Hey, I'm always happy. Hey, if you got money to lend, I will teach you. Seriously, appreciate all you guys. Obviously, you know, I've got a phenomenal mentor, Pace Morby, who's poured in a ton into me and is encouraging me to help other people do the same thing, achieve financial freedom through real estate. I'm forever grateful for everything he does for me and what he'll continue to do for me. Forever grateful for my Owners Club family, my Sub 2 family, all the real estate investors I've done this with. So thank you. And all those that are joining and want to be part of this, be a super investor. Like I'm seriously so thankful for it. We had our first Masterclass training all together yesterday, and it was really emotional for me. So I appreciate you guys. Even if you're just here to learn and get free value, like I love that. Just do something for you and your family. Don't be on the sidelines. Don't waste your time. Either invest in real estate, right? Like I gave myself an ultimatum, give yourself an ultimatum. Either you're going to actually invest in real estate or stop wasting your time. Use that time for other things you could be doing, spending time with your family, learning a hobby, whatever, or just really invest in real estate and be financially free. That's my recommendation. All right, y'all. Thank you. Have a great night.